guys, today I'm going to highlight a very interesting talk on my vlog, and thank you for joining me. I come across a wonderful paper called A Liquidity Motivated Algorithm. It's a wonderful paper by these two authors, wonderful authors, and I've read it, and I thought to implement it using the new platform that I'm building, MLES. But more or less, I want to also highlight why in our industry predictive market making is not still making a mainstream. And this is one of the core theme of this particular conversation is why still we are struggling to make slightly above complexity algorithms to be part of our trading strategies. To be honest, its answer is not to offend our existing way of working, but to actually challenge in a constructive way. Are we thinking that there are not sufficient building blocks to build this kind of strategies, or are we less confident about it? I think both of them. But in last couple of years, the tide has shifted a lot, and new technologies and new capabilities has arrived to market, which is now making a predictive market making a very much realistic thought and process. So let's me quickly deep dive into this. Not going to discuss this paper. I'm going to leave a link with papers and other very good research which I found associated with it. Please take a time and read yourself. It's a wonderful piece. I'm sure that you won't regret reading it. I'm quickly going to jump into this particular paper just to show like what it does. It basically do the tick analysis based on spreads and very simple methodology. It's not very complex methodology, but the more importantly, it used the deep learning to identify various patterns, and that's where I think the interesting idea is, because it's not very easy to put this into arithmetical solution, because every market use case and every market scenario, it will produce a different set of results. So we trained this thing using our MLEX platform, which basically pick up the trades or basically pick up the ticks from the fixed interface into Kafka. As you can see, it's constantly growing, and this is, by the way, since morning. So a lot of trade, and only for selected script that we trade into. So which is like handful of like 10 or 50, 20, handful of around 10 to 12. And then I just then they put into one of the connectors, and then connectors drop that into our OLAP system, and this all happened within like a couple of fraction of seconds, so like just under a second. The insight would be available as soon the trade has happened. And one of the first point which I want to make is like making this kind of algorithms realistic and part of our trading setup with confidence is to build a platform that you have confidence in. Whether you acquire a platform or whether you build a platform based on your need, that's an entirely different conversation. But a platform is a must, and a platform is a very powerful enabler to implement this kind of a complex deep learning algorithms as well. It's not complex, but it's a complex in a way that it takes a lot of compute grunt, and if not executed correctly, the real yield on market is very unlikely going to be there. So a way of implementing and understanding is very important on this. So we actually identified this problem based on my lot of engagement in past 20 years with whether it's a trading firm, hedge firms, or areas where I have helped companies to build payment systems, acquisitions, and all sorts of stuff. And in those sort of a statistically heavy systems, we always find the compute is a very interesting area. So we build this platform, especially with this mind, is like, can we make this complexity into very simple SQL-based architecture, which interpret behind the scenes, decipher the complexity, and does whatever it needs to do to bring that data. And I'm just tracking today, let's say I'm tracking the NVIDIA stock, and I want to basically get the bid, ask, bid size, ask size, last size, and basically compute that into my, let's say, black box. That's our platform. And then I want to basically get it into resampled and just put into that for with a 20-second time gaps. So like sending this query through system it's a pretty straightforward. And this is, by the way, my development machine, so it's slightly slower. It just got a couple of CPUs running, I think 16 CPUs, yeah. Which is 16 core, not CPUs. I think CPU is just one, it's an octa core, 8 cores. So, so here we see, very simple. It just brought the whole day's data, a little bit of early hour trading and other stuff, and it just bring it in, and all it got it from this kind of messages, single tick messages basically, and it does the projection and it brings it everywhere. And we can see like it's literally 1805, and currently we are right now 1906, which is basically a UTC time. So UTC is 1805, and it's a summer plus one in UK, so it's that one. So it's a pretty much real time, and if I run it, we can see it's very quick, isn't it now? 1806, we already got 1806, so like almost real time. The moment it happens, you got this projection ready to be used there. And then I have dropped this bid-ask spread, a very simple calculated bid-ask spread, and say like, okay, how the time series would look like. And then we actually developed this, implemented that particular algorithm, and I will see if I can commercially make it available or not, but most likely it's going to be tough to make it available commercially as out of the box, but certainly we'll see about it, like if it is worth making it. So there is a lot of code that goes inside and does the smart bit that implement this particular, and I have also added a couple of other areas into this, and voila, I managed to feed this system into AI, and this is how the AI basically see after the pre-processing that NVIDIA stock. And today we saw the NVIDIA, and this is a normalized series, so it's starting from 5 to 5 plus 5, and we see the stock price, which is the last price, the green line, going pretty much, and we saw the NVIDIA is quite high today. So let's look for NVIDIA stock price. Oh, there you go. So yeah, we can see that. Yeah, same. This is the dip. This is the starting 130 UTC, and then it dipped, and then up, and this is what exactly happened. And if we are surprised, like how it could have predicted this one, and if you carefully see, there is a very interesting signaling pattern that happens across the board after the normalizing the series, and this is where it is. It's a bid and ask. So if I don't know how to take it out, this one, but if I just open in a bigger picture, yeah, is it good enough? Yep. So you can see the bid is this one, and the ask is the yellow one, and it has picked up way before the momentum, and it also identify how the momentum would sustain. So yeah, I mean, this is more or less, we are talking about a kind of a predictive analysis that we discussed on it, and that's why it is important to have this kind of capabilities built in within the platform. It is not impossible, certainly. It is very much possible, and very much real time. So let me quickly show, like if I have to put now, let's say I want to do Microsoft, and if I run this, and let's see how the system is responsive with, well, Microsoft data is been loaded, we can see that, and this is what Microsoft look like, so it's a common pattern across it. And if I run this, I think that would be a slightly different chart we're gonna see. Yes, very much different chart we saw then, and look at that, the Microsoft is different. And if you see Microsoft today, the price variation is likely going to be, this is 2.27, and there you go. We can clearly see from just a little bit of signaling what that make a difference, and this is a normalization, so it always look like that, but the overall impact is slightly lesser than NVIDIA, because NVIDIA was a 1% extra, and we can see what was difference between NVIDIA and others. So so if I want to refresh it, we can see 809, and I can quickly refresh it. I got 8 or 10. I got other 8 or 9 as well been feed in, and yeah, it's a wonderful. So the bottom line is we need better platforms than avoiding predictive analysis on market making. Market making is, I think, ready in a way that technology can support complex algorithms very effortlessly, subject to the right platform, right technology, and right set of people are employed to achieve that. So thank you very much. I would love to hear your comments and what you think about it. Please don't read a lot into it. I'm not a wizard or a prophet who can make prediction. Uh, I'm a half-cooked mathematician with a little bit of a decent computer science capabilities. So my job is to bring diagram, not to interpret diagram. Thank you, and I'll see you in my next vlog.